All right, let's get this video going. Standing up, not sitting down in this video. Let's go. Future millionaires, wagwan, welcome back to the channel. For those of you who are new, my name is Demetress Fairman, and on this channel we talk about investing, real estate, cryptocurrency, basically anything that can put some money in your pocket. So as you guys know, we're on the path of trying to become investors. But being an investor, you make a lot of mistakes, and me personally, I've made a lot since I started investing, whether that's trying to buy a stock very cheap and trying to sell it high, but then you sell before you can even make a profit to chase the other stock that's also running up in price. Therefore, you just keep spending money and losing money trying to chase that high of 100% return. And being that this channel is about sharing my journey as I progress to be an investor, I want to share my mistakes or mistakes that other people have made in the past so that you don't make the same on your journey. So stay tuned, we're going to go over some mistakes that investors need to avoid. So investing mistake number one is going to be don't put all your eggs in one basket. So let me give you an example. Assume you've made an investment of 10,000 Jamaican dollars and you wake up the other day and something happens, the market gives you some bad news and you're down to 5,000 Jamaican dollars. And you think to yourself, well, all I need is 50% to get back to that $10,000. You're wrong, because 50% will only get you to 7,500 because you're doing 50% now of what the investment is worth, which is 5,000, and 50% of that is $2,500. So that brings your initial investment back to $7,500. So for you to even get a chance to break even or get back to your initial investment, you'd have to make a profit of 100% to even get back to your initial investment of 10,000 Jamaican dollars. So let me tie this example back into the statement of not putting all your eggs in one basket. If you had divided that $10,000 or allocated in a way that is manageable to you, that spread or that volatility wouldn't be so concentrated, it would be widespread. So the loss wouldn't be that huge. You would have a minimal impact on your overall portfolio because you diversified. Investing mistake number two is going to be chasing the hype train or jumping on the bandwagon. So prime example, we see a stock climbing up, we hear it on the business news, everybody talking about it, radio, Instagram, Twitter, YouTube, everybody talking about this specific stock, and you see the price went up to 200%, and you said, yo, I need to sell what I have right now and jump on that stock. And immediately when you jump on it, that stock went down because we're chasing the hype train and we didn't do our research. So what I'm basically trying to say is that a stock can go up 100%, 200%, 300%, maybe even 1,000%. But what is more common is that an overvalued stock will typically tend to go down after such a humongous rise. And this is what people call chasing performance, because the people who are pushing this news and all the investors who are profiting from this already bought from when it was way down here. So when they get to the high point, when you see the news, they're already claiming their profit. So you know what's going to happen afterwards? You're going to catch a falling knife. That's why I have so many stab wounds in my hands and cuts. I've done that a couple times and now I've learned from my mistakes. But here we're young investors and it's going to happen. Sometimes we have to learn so that we can know what not to do. Point number three is going to be thinking short term. Investing requires a lot of patience. And if you really need to make some great profits, and if you see a potential in a company, use this saying, Rome wasn't built in a day. Like most of the great stocks were mini companies, small companies, micro cap companies, and they were very small and they had time to grow because they have to get their performance going. So no business is not going to be like this overnight. You have exceptions, but most of the times we're in this for the long game. But if you want to be an investor, most of the times we have to sit, wait, and be patient because profits don't happen overnight and businesses don't become great overnight. Investing mistake number 4 is going to be investing with your emotions. Warren Buffett said it best: be fearful when others are greedy and be greedy when others are fearful. What he's basically saying is that when investors are greedy and when everybody's talking about a specific thing or a specific topic, that is the time when everybody wants to buy. And that is the time when people buy without any research, without knowing anything about a stock or an asset or an equity. They don't know anything. They're just investing off hype and vibes. So when you go in now with your information and your knowledge and you see that, yo, maybe no, it's not the right time, you'd invest when everybody is selling off because of fear. You just buy what everybody think is scrap because it's low. You're getting at a discount price. You're going bargain shopping. So when you get all those stocks for the low prices, and then when it comes around to everybody being greedy, you can't just say, oh, here, take mine, and sell off for some major profits. So do your research, get information, and don't just invest with your emotions. Investing mistake number 5, and this is when people have unrealistic expectations. So when you see headlines and when you see stories and you talk about stocks, this stock will give you a 3-digit increase, will give you a 3-digit profit. Don't fall for all those lights and camera, smoke and mirrors type of investments. And I'm not saying that you can't get 3-digit returns. Like that happened to me a couple weeks ago, and it has happened to me in the past. Notice I said a couple weeks ago in the past. It's not something that's going to happen every day. Like those large returns don't happen every day, and if you chase those large returns, you would get burned. All I'm saying is that when you go into an investment, set an expectation of what is realistic, what is achievable. Yes, you'll have some traders out there who are packed with knowledge, who do this day in and day out, or they're just investing fanatics. But you should know what type of person you are and what type of investor you think you can be. But set expectations that are realistic to you and the type of person that you are and the risk that you're willing to take. And investing mistake number 6 is not having a goal. But before we even get into accomplishing our goals, we have to have a tool to get there. And this is our strategy. We have to find out what strategy works for us, or what strategy do we actually understand and can replicate consistently. And when we find out the strategy, then we go on to the goals. Take me for example. I tried the trading and I found out it wasn't for me. But for me personally, I found out that my strategy is value and dividends. That is what I like, and that is what I want to continue doing when it comes on to investing. So the first tip that I can give you for goal setting is that have a goal for how long you want to be in each investment. Second tip is, are you going to be a short term, a long term, or both? And yes, you can have investments in your portfolio that are short or long-term goals. So you can decide what you want to do, but have these set out. Also, set a goal for how long you want to learn and develop new skills, because this is a game where you don't just build a skill and think it can bring you to level 100. Each level you have to acquire new skills and keep on learning to build who you are as an investor and build your knowledge base, because businesses change, strategies change. The fourth goal that I would like to talk about is documenting your investing or trading journey. Like, you need something to keep track of your investments, because you can't go out there blindly. You have to see what worked from what didn't work to help you to get something that works. So document this, either doing it by the books manually, an Excel sheet, or you can go online, My Money JA. There's a lot of trading journals or investing journals out there for you to keep track of what you are doing. And the last goal that I want you to have for yourself is for you to believe in yourself. Like, a lot of people don't believe in what they're doing in their investment journey. I'm a prime example. Now and again, I battle with the imposter syndrome. Like, what am I doing here? I'm not no big shot investor. I'm not a financial analyst. I'm not one of those big guys. I'm just a normal guy trying to learn this investing thing and have some money for my retirement and just document the process along the way. Most of the times, it's due to me not believing in myself, because people actually come to me to discuss these things about stocks and investments. And if people come to me, then clearly I guess I'm doing something right. So it's for you guys to believe in yourself also. Believe that you can do this, and that investing not bigger than you, small amount than you out there actually do it. You have an edge, and that edge is that you're willing to learn and gain information and better yourself. So if you guys really want to start your investing journey, then just contact the nearest broker to you, sign up, get your information, open up your investment account, and just start to do this thing monthly and consistently. Thank you guys for watching. Thank you for sharing and subscribing to this channel. And until next time, happy investing.